Hello guys, this is Alex from Currents Trading, and today I'd like to be covering the state of the crypto market and see what we could expect over the next few days. So here I pulled up the Ethereum chart on a 4-hourly, which is usually the way I identify patterns as well as trends. What I did is I drew some very basic trend line. This is always what I start up with when I'm looking at the market to identify trends. Very important. This is elementary school level. As you can see, very basic. We had here the beginning of our trend, this uptrend here. We started to have some pullbacks for people to buy in. And as you can see, the pullbacks were predicted pretty accurately by our gamma strength and momentum indicator. You can also use other indicators as well to find confluence. Same thing here, we're starting to see red and then start dumping cleanly. And then this big ass red candle broke down below the trend line. And this is what confirmed the beginning of our downtrend. So here we had those just natural pullbacks. People are taking profit of their shorts. This is why you're seeing this pullback. However, you also have a lot of longers, so the bulls are also closing their position here or flipping short, therefore pushing the price down. This is just a natural cycle of trading. Same thing here, as you can see, this first pullback, which confirms our trend line. And then we have the beginning of a new small uptrend here at this breakout. First pullback, second pullback, but here this pullback was just very weak. And this is what I was talking about yesterday. I wanted to go long in this area because this is what I wanted to see. I went short here, right? So I took advantage of this, but I wanted to go long and this just felt very weak. Like just absolutely no gas in the tank whatsoever. So I was kind of sensing a breakdown below my trend line. And this is what I woke up to this morning. We broke down below it a big ass red candle. And what I'm seeing here now is that we closed the 4-hourly candle below it, which usually indicates and confirms the beginning of another leg down. And I will get into more details on what I foresee over the next few days. So first of all, here, what I'm seeing is this big fair value gap that, in my opinion, has been already invalidated. Although we're not out of it, fair value gap, you can just research it online. I'm not going to go over it too much. However, an area of interest for bulls. They want to be buying in this area, hoping for the price to pull back into it and then push the price up. But this hasn't happened because I think there's not enough interest in this area, okay? So the bears are winning and I'm hoping for the price to close below this fair value gap. In my opinion, what's going to happen, and then start the beginning of another downtrend towards our targets. You can look at the daily pivot points or weekly pivot points. And we're going to look in a minute where that might be. So we have this soon to be invalidated bullish fair value gap. We also have this bearish fair value gap, which is great for me right now because this is what I am going to be for the next few days. I'm going to be bearish. And so here we have this bearish fair value gap that shorters are hoping for a pullback and they're setting their limit orders here. You also have a lot of trapped long buyers that are going to close their position in this area. This is what's just naturally going to happen. And what I foresee is going to be this. So price might continue to go down a little bit or even pull back now into this area, maybe break above it a little bit and then eventually just trickle down or go very aggressively down. This is what I'm envisioning over the next few days. And so how am I going to position myself? So for me to position myself, I typically zoom in into the hourly chart. And as you can see, we had a prediction here of a pullback. However, this pullback is starting to be invalidated, right? The bounce is quite weak, in my opinion. We're not even pulling back towards the fair value gap, which is usually a good indication of a very strong move to the downside. So my point of interest, if I go short, would be this zone here. This zone would be my take profit, all right? So how do I enter this short position here? I would zoom into the 1-hour chart and I would start positioning myself right now with about 50% of my position. And I'm gonna place my stop loss to somewhere above this recent high and then probably give it some wiggle room, maybe above this resistance area. Typically, my risk-reward ratio is very dynamic, so I don't really work with risk-reward ratio. Obviously, I want to be towards 1 at least, but let's say my first take profit here, I would probably take off 20 to 30% of my position, and then I would just let it run towards another point of interest and take off another 20 to 30%. But once I reach this level, I move my stop loss to break even at the second take profit. This is typically what I do because I've noticed I've been stopped out too many times and missing out on very aggressive breakdown or breakout. So I can tell you from my years of backtest and live experience that moving your stop loss to break even at the second take profit is usually a better idea. Last but not least, let's have a look at the Omega V2 and what information we could get off of it. So we have this descending trend line. By the way, the speed, I always set it, when in doubt, always set it in over adaptive with a little bit of filtering, okay, to avoid some false signals. But yeah, overall, the trend is down and we have this nice cloud protecting us. So I really don't think I'm gonna get stopped out on this one. Here we have our daily support and a lot of pivot points here, which is why we're kind of stuck in this area. Price is stalling out. And I think the next stop is going to be towards this area of support on the daily, so 1780, and then I'm hoping to hit the daily third support. Also, we have the Omega trend on the 1 hour. This is what I use to enter my trades. Sometimes I even go down to the 5, 15, and 30 minutes. So overall, our risk reward ratio is going to be 1.45 on this one. And I'm hoping that we go back towards 1750. If you don't want to have all these indicators on your chart, what I like to do personally is to basically just use the Omega V2. What you can do is essentially just have these and only keep, I'm gonna move myself here, and only keep those signals so you can add also the gamma strength to it, okay? And whenever you are in, let's say on this move, whenever you are in overbought territory on at least 2 of these signals, then you can start looking for shorts, especially when the downtrend is confirmed here, as you can see, because the price is below the Omega V2 cloud. Also with the multi-time frame screener, I really like using this. I use it a lot, guys. Like every time before I enter a trade, I like to have it to 30 minutes. If you want to be extra safe, you can use the 60-minute, the 1 hour chart. This is really up to you. But I kind of like to be early on my trades, and especially because I practice double or triple entries. So I can allow myself to be very early on the trend shifts. All right, so I guess that is it for the day. I'm hoping that we see these 2 areas filled for my take profits. We have around 1775 and then 1750. So these could be good areas to target for our shorts, guys. Keep it up. I'll try to make more videos, especially when I see the beginning of a new trend forming in the crypto market. If you like this content, just give me a thumbs up, guys. Thank you.